Final investment decision is an economic jargon that may confuse many.
But it's simply a stage in a capital project planning process when companies decide to make major commitments after establishing enabling infrastructures.
Now, today's event, big as it is, may not relate with the common person. The FDI will, in earnest, kick off a large capital injection worth 15 billion shillings into an economy struggling to rebound from the shocks of the COVID-19 pandemic,
which came with its socio-economic impacts. I think there's need to relook the assumptions we had before and see there's a long-term investment decision and then there's the short-term. The long-term is involves more capital expenditure, where we're going to see a gradual move from exploration to production, and that involves more of acquiring or purchasing of capital equipment, most which are imports. Yeah. Then the short-term investment decision involves more of things to support working capital, and that is more of purchase of goods and services.
But beyond the fanfare at the signing ceremony at the well-manicured lawn at Kololo Independence Grounds, graced by President Yoweri Museveni and the top honchos of French and Chinese oil firms, how can this investment trickle down to the grassroots? I asked a few vendors in Wandegea Market and they had no idea what was being signed today, but they are clear on where the oil money should go.
The education sector, hospitals.
Twalina ebintu byaffe nga cooperative ezo abantu nga abaliro mu bulimi
naye kati batuyambeko amafuta sente ziva mu mafuta batukoleremu ku naffe tusuubiraawo kyensobola ekintu ekinagenda nga tekiri expensive.
Manage your expectations in regard to the size of the resource itself and what to expect. We are not all going to become oil sheikhs or drive Ferraris and stuff like that, but we are going to have benefit.
Experts project the $15 billion foreign direct investment will move Uganda's economy into the lofty lower margins of a middle-income economy, with every Ugandan earning around $1,050 annually, up from the current $1,020. Uganda's GDP, which stands at $34 billion, will likely rise to $40.1 billion, which is the equivalent of 139 trillion shillings by 2025 as a result of the investment in the oil and gas sector. At least 21 trillion shillings will be spent to develop Kingfisher and Tilenga oil wells, and contracts doled out to Ugandans for local content are estimated at 13 trillion shillings. The investment is also expected to result into 14,000 direct jobs and 45,000 indirect jobs.
So you will not be able to really literally see the benefits of the redistribution effects of the oil in your pockets unless the oil revenues are actually also redistributed in services that even the poor actually access from. Either markets are opened up and potential for market to generate incomes are done in terms of where people actually access a livelihood from, to make sure that money comes back to them. But other than that, you can still be a middle income without necessarily making everyone feel that kind of resources.
Uganda estimates to produce 230,000 barrels per day when commercial production begins. It is also estimated that the sector will break even at $55 per barrel.
It has to be of keen interest in such that if they're invested, then we're looking at the proceeds of the revenues themselves. So how do they spill over to me? That in terms of accountability.
Oil prices are quite volatile, and the recent end of lockdowns across the world pushed the price to $87 per barrel.
The undisputed demand in all this is that these tangible benefits should trickle down the common person, perhaps with good roads, railway, quality and affordable education, affordable healthcare, and an economic growth that benefits Ugandan citizens. Edward Muhumza, NTV.